Welcome back to Investing Talk Podcast. You know, when we think about PepsiCo,
Mm.
um, yeah, we usually picture that refreshing cola, right?
Yeah.
But their business uh, goes way beyond just drinks.
Yeah.
They've got this huge snack empire
Totally.
with big names like Frito-Lay, Quaker Oats, Gatorade.
It's massive.
Yeah, it's a huge portfolio. But their latest earnings report, well, it might leave some investors feeling a little less than bubbly. Let's just say that.
That's true. PepsiCo's revenue actually dipped in the last quarter of 2024, and not just by a small amount. They missed what analysts thought they would make. And this is actually the third quarter in a row with sales going down. That's definitely something that should make you pay attention.
So a dip in revenue, not exactly what investors want to hear. But, we need to think about this a little bit. The economy has been kind of up and down lately.
Right.
And people are definitely being more careful about spending money, especially on things like snacks. I know I've been thinking twice before I grab that extra bag of chips at the store these days.
Yeah.
What about you? Have your snacking habits changed at all?
Well, reports show that the entire salty and savory snack market didn't do so well in 2024. This is actually a big change because for years, those kinds of snacks were doing great.
So this is across the board, it sounds like, not just PepsiCo.
Yes, that's right.
Now here's where things get interesting. PepsiCo's sales in North America have been struggling, but at the same time, their business internationally is doing really well.
Yeah,
So it makes you wonder, what are they doing differently in other countries, right?
definitely.
It really shows how important it is for a global company like PepsiCo to have a lot of different things going on, not put all their eggs in one basket, as they say.
Absolutely. International growth like that is really helpful to balance out some of those losses they're seeing closer to home. And it definitely raises some questions about their strategies in different parts of the world. Maybe we can look at that some other time.
Yeah, that's a great idea. Okay, so we talked about the big picture. Let's look at the technical side of things.
Okay.
Right now, PEP is trading below both its 50-day and 200-day moving averages.
Right. And to explain that a little, those moving averages are really important indicators that technical analysts use to get a sense of where a stock price might be going. And usually when a stock is trading below both of those averages, it means that we could see the price keep dropping.
So not exactly what investors are hoping to hear, but there might be a good thing here too.
Oh, okay.
Their RSI, or Relative Strength Index, is sitting at around 41. Now, for those who don't know, the RSI is basically a way to measure whether a stock is overbought or oversold. And an RSI of 41 says that PEP could be getting close to oversold territory, which could actually mean the price might go back up.
It's possible for sure. When a stock is considered oversold, it usually means it's been dropping in price more than it should based on how the company is doing. So it can actually be a good opportunity for investors who are looking to buy while the price is low.
I see. And to make things even better, PepsiCo just said they're going to increase their dividend by 5%. For investors who want to get that regular income, this could be a big reason to invest. What do you think? Would a bigger dividend make you more likely to invest in a company, even if they haven't been doing so great?
It's a good question, and one that really gets at how people invest. On one hand, a dividend increase shows that a company wants to give back to its shareholders, and it can be a sign that they think they will do well in the future. But it's also important to look at more than just the dividend and consider the whole financial picture and how much the company could grow.
So it's not just about chasing the dividend money, it's about looking at everything.
Exactly.
And with PepsiCo, we have this interesting mix of things happening. Sales are going down in North America, but they're growing well internationally.
Oh,
The technical indicators are giving mixed signals, but then there's this chance for a price rebound. And of course, there's that dividend increase, which makes things even more complicated.
right.
So what are your thoughts on how all these pieces fit together?
Yeah, it really shows how hard it can be and also all the possibilities of investing in a big company like PepsiCo. You got to weigh those ups and downs in the short term against how they could do in the long term.
Right. It's not just about looking at the numbers. It's about understanding the whole story. And speaking of stories, let's talk about all those different brands they have. We know PepsiCo for their drinks, but their snack business is huge too.
Definitely. Their Frito-Lay division, which has big names like Lay's Doritos, Cheetos, it makes a big part of their revenue. People really see it as one of their biggest advantages.
I mean, who doesn't love a good snack?
Well, that's the thing. Tastes are always changing.
Right.
And as we said earlier, the snack market is going through some changes. People are more concerned about health now than before, and there's a bigger demand for healthier choices.
So PepsiCo has to keep up, right?
Exactly.
Yeah.
They've actually started doing things in that direction already. They've added things like baked chips and hummus to what they sell. But to really stay ahead of the game, they need to keep innovating and making new kinds of products.
It's like they're playing chess, always trying to guess what the next move will be.
That's a great way to put it. And the competition is tough. It's not just other big snack companies they have to worry about, but also those smaller, newer brands that are often a lot quicker to jump on trends.
It's a fast-moving world out there for sure.
Yeah.
But we can't forget about their drinks. They're not just about cola anymore.
Hmm.
They have everything from juices to sports drinks to bottled water.
Their Gatorade brand has been doing really well.
Yeah, it's like the name everyone thinks of for sports drinks.
For sure.
But even there, they're getting pressure from those newer brands that are all about healthier choices.
It's a constant fight for market share. PepsiCo needs to make sure their brands stay relevant and that people still like them, especially as tastes are changing.
So we've talked about a lot of things. What does this all mean for people who are trying to decide if PepsiCo is a good investment?
Well, it's complicated. As we've seen, PepsiCo is a big company that sells all over the world, and they have lots of different brands. But they're definitely facing some challenges from changing what people want to buy to the overall economy.
It's a balancing act.
It is. Their success in the future will depend on their ability to adapt and innovate.
To stay ahead of the curve.
Exactly.
So for someone looking at PepsiCo right now, is it a buy, a sell, or a hold?
That's the big question, isn't it? And there's no one right answer.
Yeah.
It really depends on what your goals are for investing and how much risk you're willing to take. If you want a stock that is steady and has a history of paying dividends, PepsiCo could be good to consider. But if you want really big growth, there might be other options out there that are better.
It's that classic question of value versus growth.
Exactly. And we always have to remember that how a company did in the past doesn't mean it will do the same in the future.
A really important point to keep in mind. Let's take a minute to summarize some of the key things we talked about for our listeners today. We've got a company with lots of different brands. They're having some trouble in North America, but doing well internationally. The technical indicators are giving us mixed messages, but that dividend increase is something to think about.
Yeah, overall, I think PepsiCo's future is kind of uncertain right now. The main question is, can they adjust to the changing tastes of consumers and get back on track in North America? That's going to be super important for their success in the long run.
It's a story that's still being written, and like always, we encourage you to do your own research before making any investment decisions. Speaking of research, if you like this breakdown of PepsiCo, we'd love for you to subscribe to our channel and share this with your fellow investors.
Yes, definitely.
And be sure to leave a comment below. Tell us what you thought, what questions you still have, or anything else you want to add. We love hearing from you. It's interesting to me how a company like PepsiCo, such a big name, has to always be changing and adapting to stay on top. It really makes you think about how much power consumers have and how they can change whole industries. What are your thoughts on that?
It's really important for companies, especially those that sell directly to people like PepsiCo, to know what consumers want. Those wants and needs are always changing because of demographics, cultural shifts, even things like what's popular on social media.
It's like they need to be able to predict the future.
Well, not exactly predicting the future, but it's about being ready for those changes and knowing how to respond. For PepsiCo, this means understanding why people are snacking differently, like we talked about earlier. Are people wanting healthier choices, choices that are better for the environment, more interesting flavors? These are the questions they should be asking.
And it seems like they've already started making some changes in that direction, like you said, with the big chips and hummus. But what else could they do to really get those changing tastes?
One thing they could do is make more snacks that are good for you. This could be things like plant-based snacks, snacks with healthy ingredients, or even snacks that come in smaller portions for people who are watching their calories. They also need to think about packaging and being environmentally friendly. Consumers care more and more about how their choices affect the planet, so using eco-friendly packaging and reducing their carbon footprint could be a big plus.
Right, and we can't forget about the marketing. How they present their brands and connect with people is important.
For sure. They need to tell a story that makes sense to their target audience. This could be talking about how healthy their products are, how they care about the environment, or even working with influencers who share their values.
So it's about being creative, being flexible,
Yeah.
and really understanding what their customers are looking for.
Exactly. And that's true for any company, big or small, no matter what industry. In today's market, you have to be able to change if you want to survive and do well.
Well said. So as we finish up this episode, I want to leave our listeners with something to think about. We've talked about the challenges PepsiCo is facing now and what they need to do to stay ahead of the competition. But what do you think the future holds for this famous company? Do you think they can make a comeback in North America and keep doing well around the world?
That's hard to say. Only time will tell.
Yeah.
But one thing is for sure, PepsiCo has a long history of coming up with new ideas, and they know what consumers want. If they can use those strengths and keep adapting to how the market is changing, I think they can stay a big player in the food and beverage industry for a long time to come.